Remember, I told you earlier this week, I told you last week that the Dow could end up moving to new highs and camouflage the start of the sell-off. And I think we're seeing that. We've seen the start of the sell-off clearly with the NASDAQ. We have the Dow moving to a new high. Now, what's interesting to note is the Dow is moving to a new recent high, and the transports so far is not. Also, the transports is nowhere near the 2024 peak, and it still has not moved above the 2021 high. They have that larger divergence between them, but it's not moved above this high over here. The Dow has. It's moved above the peak in late 2024 and early 2025. That 45,000 area, we're now above that. We moved slightly above it previously, but now we have a solid push above this level. We had just moved above it previously slightly. Now we're clearing this level. That's that dotted line you see right there. Something worth watching is, do we have a divergence between the Dow transports and the Dow industrials? So again, something worth paying attention to here. This is the transports, this is the Dow industrials up here. One of the components of Dow theory is a principle of confirmation, that they need to confirm one another, and if we don't see the transports moving to a new high in this recent price action, we could see sell-off still take place. The Dow could camouflage sell-off. We've seen the NASDAQ drop since August 13th, the last week and a half. We saw it drop, 4.30%, rounding up there, but very close to that level. Now it's just rebounding back up. It's not moving to new highs. Nvidia is not moving to new highs, but the Dow is, and it could be camouflaging it to get that headline, oh, the Dow's hitting new highs. Powell's going to cut rates and we're moving into the new bull market. That's the narrative. So you've had now distribution in the tech sector. We've seen some distribution with the S&P, even though it's rallied to just under the previous highs from August 15th. Something we're paying attention to here going into next week. Let me just say this, the Dow may even go higher. We may just complete a counter trend on the NASDAQ, and we'll see if the S&P joins the Dow going higher, or does it turn off of overhead resistance. More about Powell shortly. Dow up 846 points, up 1.89%. Remember I told you, as we're in a topping process, the Dow could be camouflaging what is going on. NASDAQ's not moving to a new high. The Dow is. More about that in a moment. The Dow up 1.89%. The S&P just under the high, up 1.52%, up almost 97 points, breaking a 5-day losing streak. The NASDAQ breaking a 6-day losing streak. Again, we had the sell-off before Powell. I talked about this yesterday. We were up 1.88% on the NASDAQ. The Russell was up 0.86%. And the VIX was down 14.34%. And you know what that means. The VIX dropping more than 10%. Now predicting either Monday or Tuesday, there is now an 85% chance that the S&P has a down day for a pullback or a reversal. The VIX continues to stall at the 50-period moving average. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. I thank you for your consideration for that. We had the VIX RSI get back above 50 on Thursday, and then it turned right back down. Again, it's still forming a divergence, but getting rejection at that 50-period moving average. Same is true for the MACD. It turned right down after getting a bullish cross, turning right back down. The S&P still might try to slam into the trend lines of resistance. Most recent high in the trend line going back to the 2023 low, but a big wide range bar on the VIX. That could be setting up a reversal candle pattern. The VIX's prediction is correct, and we see a down day on the S&P either Monday or Tuesday. Signals for the S&P 500. Momentum had turned bearish on Thursday, turns right back to bullish on Friday, but not so with the NASDAQ. The S&P came to just under the August 15th high. We saw the bearish signal flip on Thursday, flipping right back. You see the little blue arrow, see the little red arrow, it flipped right back on Friday. Here it is up close. If we move to try to take out this high, which we were just slightly under it, just barely under that level at the highest of the session, we could form a triple divergence on the RSI in the daily time frame, and if so, you could see another green, a couple green bars right here. If so, NASDAQ could get a bigger counter trend. Now, NASDAQ is nowhere near the highs. We've had a 7-day sell-off, pardon me, a 6-day sell-off from the reversal bar, which was a black candlestick, and we've rallied up to the 10-period moving average, and we're stalling. Got to be able to clear the upper boundary of the cloud in order to turn this around. Momentum is still bearish. The cloud is red. The bars are red. Back above the 20-period moving average, but we're stalling so far at the 10-period moving average, and there's still more resistance even if we do clear that. The likely catalyst next week, the likely catalyst will be Trump's tariff announcement and maybe Nvidia's earnings, which I think are on Wednesday. Can get above the 10-period moving average. You can backtest, try to backtest the broken trend line of the rising wedge. We had a rising wedge, it broke down, and we got a bigger rising wedge. S&P is backtesting it right now and much closer to that peak. If it reaches a new high, it's going to slam right into the weekly resistance trend line with our linear scaling you'll see in this video. Weekly trend line. S&P 500 came to just under the August 15th high over here, which is where we had that divergence, and we had the rally back up again. This is the 15-minute chart. Remember I talked about the 50 and the cloud being resistance if you can clear it. Go back and test the 200 here and the 10 on the daily. We overthrew those levels and we soared, and again, now we're just under those levels. It's probably going to be that you'll see another divergence develop here and go a little bit higher in the S&P 500. Likely see another divergence between the NASDAQ and the S&P 500 if that is the case. But again, there's still major resistance directly overhead, slamming into it with the log scaling and just below it with the linear scaling, showing both of those trend lines in this video. But again, NASDAQ is nowhere near the highs. If we do go a little bit higher, you could be back testing the breakdown of the rising wedge here. Now, again, we had this other rising wedge. We broke down from it. We back tested. We slammed into major resistance. July 31st, we turned down, and we couldn't get a follow-through. We got a confirmation, but no follow-through. Here we're breaking down, and we're now potentially in back test mode again. If we do move to a new high, you form a triple divergence, and then you also slam into that trend line in the weekly time frame just a little bit higher. Plus, that could take us right into this trend line as well, along with that weekly trend line longer term from the 2023 low that I'll be showing you. Show it to you on the daily chart. We could be slamming right into this trend line right here if we go higher and form a triple negative divergence. That will cause the bears to completely give up, throw in the towel, and it will cause the herd to believe there's nothing taking this market down. Buy the dip, buy the dip. We're likely about to get a bigger pullback than what we've seen. Now, this is assuming that we can clear this peak right here. We're just slightly below it, but directly overhead at the 6,500 area, low 6,500 area, you have this trend line, and you have the trend line, the longer term one from the 2023 low. Is what we keep turning down off of here and over here. July 31st, August 15th, did we go up and reach this level again? 500 is bouncing off of the 20-period moving average in the daily time frame, off of the 200 here in the 60-minute time frame. We had a divergence, but it only gave us a sell-off to the 200-period moving average. If we go make a new high, I talked about earlier in the week, a possible divergence of multiple point divergence in the more recent price action. If S&P can't make a new high, it's got to come back and take out the 200-period moving average or pop above it, again, form another divergence, and then turn down. Take it going to slam right into that 6,500 area, the trend lines that I'm showing you in this video. Now, if the S&P moves to a new high and NASDAQ does not, we'll get another divergence with them. We had one on August 15th where the S&P made a new high, the NASDAQ did not. NASDAQ has rallied back up to the 50-period moving average in the cloud and has stalled there. And that's right where our 10-period moving average is in the daily time frame, the 200-period in the 15-minute time frame. So again, NASDAQ may get a bigger rally if the S&P can try to make new highs. It's likely that it's peaked and it's going to make a lower high. If I bring the NASDAQ 60-minute chart up close here, you can see we're stalling around the 50-period. Above that is our cloud. We may go higher and get a larger Fibonacci retracement. If this peak was a gap and trap, selling off 4.30%, I'll be watching, do we get a lower high? Now a counter trend on the NASDAQ. NASDAQ 100 had a 6-day losing streak in that reversal bar 7 sessions ago on the 13th of August, a black candlestick slamming into major resistance in the weekly time frame. We've dropped nearly 4.30%, and we had a sell-off ahead of Powell. On Wednesday and Thursday, when we were getting these bars, I told you that we may end up rallying with Powell because we got so far away from the 10-period moving average, both with NASDAQ 100 and with Nvidia, which broke the key trend line, suggesting that we're going to get a bigger sell-off. I did tell you last weekend that Trump and Powell would rattle the market this week. Trump did. We ended up getting a rally with Powell, suggesting that rate cuts are right around the corner. So NASDAQ, with the divergence, getting the sell-off, now rallying back up towards the 10%, towards the cloud. The S&P did not get the same size of a sell-off that we had with the NASDAQ. The S&P dropped 2.2% from the August 15th peak. We had a 5-day losing streak. It broke with Powell. We rallied back up above the 20-period, above the 10-period, overthrowing it and moving back to test this high. We're just underneath it. Back up towards resistance that we turned off over here and that we turned off over here in the weekly time frame. NASDAQ, or the S&P, has been going sideways, slightly drifting higher. We've had a divergence. If we do go higher, it will form a triple negative divergence, going back and slamming right into the weekly resistance and create even more complacency than what we already have. It's quite a bit of complacency. And in reality, again, we've seen a sell-off from the July 31st peak, and we only went 0.85% higher than that high. Right now we're back just under that peak from Friday, August 15th. Now look what's happening. This is the trend line in the daily time frame from the 2023 low with our linear scaling. We've come up, we hit it here in 2024, in the summer of 2024. We came up and we broke it here in 2025. Now we're back up, slamming right into that trend line, a very important trend line. We hit it at the July peak on July 31st, and then we hit it again last week on August 15th. And now we're just below this trend line again. And if we do go higher, you're at it once again, here with our linear scaling. Rally back up has not taken us back above this rising resistance trend line. So far, the Dow moved to a new high. The S&P and NASDAQ so far have not. NASDAQ's way far away from its highs. S&P is just under it. Directly overhead, you've got this trend line to contend with on the S&P 500. Directly overhead is our previous peak from August 15th. Right above that, at around just at the low 6,500 area, 65, 6510 or so, is this trend line, which is where we continue to see the sellers come in. If S&P does attempt to go higher, this is a trend line where we're likely going to stall at if we do try to go higher. Remember, we do have Nvidia earnings next week, likely get a tariff announcement out of Trump next week. Semiconductors with pharma, the semiconductor tariff announcement is coming. We're just slightly under the trend line from the linear scaling. With our log scaling, we're slamming up into this trend line yet again. This is the weekly chart right here. I've excluded the shadows over here at the 2022 high, connected it to the December peak. As I said previously, we slightly overthrew that level and then turned off of it, and we're slamming up into that level yet again. This is the weekly chart on the S&P 500 with our log scaling. Zoom out, you can see that trend line. Again, here it is right here. And we have come right up to that trend line again. We're forming this negative divergence, and we're forming what could be a hanging man candlestick going right into that resistance. Now, again, if we get the pullback here, eventually I think we go to this other upper boundary, as I've talked about, but I still think we're going to get a reaction off of this level right here. And because, again, we're just, slamming up into it here over the last couple of weeks, turned off of it in July, slamming up into it again in August, because we don't see a sell-off immediately, the market, the herd, they get lulled into a false sense of security, and they believe, it's not going to happen. When I called the bottom down here, they believe there's no way we can rise. Now they believe there's no way we can fall. But we're getting something very similar to what we had over here, where we just kind of formed this topping process around the highs over here like in 2022. And again, I think we'll end up selling off and then eventually try to clear this level of resistance. Bitcoin is turning off of trend lines from the log scaling and the linear scaling. You can see my latest Bitcoin video at the end of this one. So it was the previous couple of videos before that, 2 or 3 videos ago, I showed those trend lines, halting at trend lines on the NASDAQ and the S&P. Pull back, build momentum to try to clear them. But as we're slamming into this trend line right here, and just below the trend line, again with our linear scaling that we saw up close on the daily chart a moment ago from the 2023 trend line, that low, again, just below that level, we're getting a hanging man candlestick, a possible hanging man candlestick. And here it is up close, the S&P. We ended up selling off and then rebounding back up off of the open of the week and ended up closing higher by 17 points, by 0.27%. You now have a possible hanging man. Now, candlesticks mean nothing unless they get confirmation and a follow-through, but this could be a reversal bar for going up and slamming up into the weekly resistance. Again, we have to close below this week's low in order to make that happen. And then if you're going to get a bigger sell-off, you got to take out this 10-week moving average. S&P was just below the previous week's high. NASDAQ only rebounding to the 10-day moving average so far in the daily time frame, but that topping tail from the previous week on NASDAQ's weekly chart holding up. Watching to see if we would get a big red bar this week for an evening star reversal in the weekly time frame. We didn't get it. Wide range bar, the candle of indecision there, and then a big red bar. But we ended up getting, again, a potential hanging man, a bearish reversal candlestick, but a lower high. And we have a bounce off the 10-week moving average. The hanging man candlesticks will mean nothing unless they get confirmed with a sell-off next week, a close below this week's low. What could do that? A sell-off with Nvidia. What could do that? Trump rattling the market with his tariffs. We're going to likely get the semiconductor tariffs next week. Maybe the pharma tariffs announcement. We've already got steel and aluminum announcement earlier this week that rattled the market. We did see a tech sell-off with the breakdown of Nvidia. Mixed messages from Powell, and whether that's because of Trump putting pressure on him, because this is his last, or because this is his last speech at the Jackson Hole Summit and he wants to be the rock star in the financial world, I have no idea. But the guy's sending mixed messages, that's for sure. Couple of meetings back at his press conference, Powell expressed concerns about stagflation, the weakening economy, and rising inflation. The last meeting, the last press conference, a couple weeks ago in July, Powell pretty much canceled the September cut, saying they're in a waiting place to see what impact the tariffs will have on inflation. This is a CNBC article back from July 30th. You know that was Powell's tone if you watched the press conference, as I did. Powell pretty much canceled the September rate cut at that point. Got put back on when we got the weak jobs report and the previous months being down, revised downward. You have all the experts coming out and saying, well, first they were saying, oh yeah, we're going to have this soft landing. And then you have all the experts coming out saying, oh, the Fed should be cutting, the jobs, the labor market is weakening. The problem with that is we don't know if the numbers are real or not. We have no idea. If you follow my work, you know that for the last 2.5 years, the folks over at the Labor Department have been artificially propping up numbers and then revising them down later. They overestimated by nearly 1 million jobs in 2023 and then another 1 million jobs in 2024. It quite reached that level, but it came close. Now they're moving them in the other direction rather than artificially propping them up, pushing them down. And again, The BLS commissioner in charge of the statistics was fired. Now we're going to get revisions. We're going to get the new data here, so we don't know what it's going to be. What if it ticks back up? Powell's now concerned about the labor market and hinted, as CNBC put it, a tepid indication of possible interest rate cuts, meaning a September cut. Powell talked about this juggling act between inflation and between the economy. He talked about a weakening labor market and weakening GDP. And again, let me be clear. I believe that we're going to see both eventually go negative. Okay, we're going to see job losses. We're eventually going to get negative numbers for the GDP, and that may happen after the recession already starts. In 2007, the recession had already started. Get the negative numbers until later in 2008. The point is, Powell's basing this, a lot of it anyways, on the weaker jobs report that we don't know. Is that real or is that fake? We have no idea. Trump ended up firing the commissioner of statistics. Now we're going to have somebody new in there. Do these numbers get revised up, or are they real? Eventually, we are going to get negative numbers. Is that happening now, or is this just manipulation? Somebody giving us more bogus numbers that they've been doing for the last 2.5 years. All I'm saying is, okay, Powell's looking at this and saying, okay, we're seeing this weakening in the labor market. That may warrant an interest rate cut. He's really sending mixed messages, and also sending mixed messages about the 2% target level for inflation. Kind of mixed messages there. That now going bye-bye and going on the wayside. Now, is this getting everybody's hopes up for a big letdown as we get the next jobs report that ends up coming in strong, or the revisions turn back up? You don't know. Because when you have people putting out fake numbers, you don't know what to believe. Powell's saying all this based on more bogus numbers out of the Labor Department. I have no idea. People out there saying, oh, here comes the bull market. Yeah, because the herd believes that rate cuts are bullish. We have Powell saying it may warrant rate cuts. We didn't get them yet. Did you hear what I just said? We don't have them yet. I'm basing the Fed cutting rates on what they did in the past, as I've talked about. At the 2000 top, 2007 top, we got a stock market peak. You had a crash, and then the Fed panicked and eventually started doing jumbo cuts. That's the way it's happened in the past. That was a crash to kick off the bear market. It was associated with the recession. The Fed panicked, associated cutting rates associated with the recession. It happened in 2000 and early 2001, January 2001, we got the jumbo cuts. In 2007, the recession started in December, and we got the jumbo cuts in January of 2008. January both times. Do we get it in January this time? I wouldn't be surprised. Fed is usually late to the party, but inflation is ticking back up, and I think that's going to prevent the Fed from cutting rates. So when if the jobs report, the numbers come back in strong? Well, then that's not a reason to cut anymore. And if the inflation data in September starts ticking back up, we're going to have the next Fed meeting on September 17th. Okay, the two-day meeting, the 16th and the 17th. This is going to be projections, by the way, economic projections, and where does the Fed see the Fed funds rate going in in 2025 and 2026. Right before that date, on September 11th, we're going to get the CPI data. When if the CPI is starting to tick back up? Again, I predicted that it would bottom out and begin to rise, and that the PPI would get a higher low and begin to rise. We're seeing that happen. But I'm just telling you, when if the inflation data begins to continue to rise aggressively, as we just saw the PPI data rising to rising the most in the last 3 years. If the jobs report, for this next job report, what if we see the revisions revised back upward? Then your rate cut goes bye-bye again. No reason to cut. Well, again, as I keep saying, the Fed should be aggressively cutting because recession is coming. They just happen not to believe the recession indicators, so they dismiss that. See minutes Earlier this week, the Fed is divided. They're all worried about tariffs and Trump's tariffs and inflation, causing inflation, concerns about the labor market. But today, with Powell's speech, again, we really have mixed messages coming out of Powell. Now, again, let me be clear. I don't know if this is part of ego where Powell, this is his last speech as Fed chair at the Jackson Hole Summit. Does he want to go out being a rock star? And in doing so, is he keeping the market false hopes? Powell likes his position. And again, being the Fed chair in the financial world is like being a rock star. And he clearly likes this. Is Powell just trying to make everybody happy, hoping for the best, possibly giving false hope? I have no idea. Or caving now to Trump's pressure. I talked about it yesterday. I talked about it earlier in the week and last week. Trump's putting a lot of pressure on this guy. Is he now just caving? I don't know too many people that can handle that much pressure without caving. Is this now part that he's caving under pressure? Maybe, and I talked about yesterday in Thursday's video, Powell could just throw, the market a bone, do one cut, and then go back into this wait and see mode, get Trump off his back. That be what we're witnessing here? Is Powell beginning to cave? Because again, he's sending mixed messages. He really is. Powell has been taking a very hawkish tone. Now here he's trying to say, well, rate cuts might be necessary. Again, possible rate cuts. Market be in store for a letdown. Or maybe he does one cut and then moves back into the waiting game. Now, historically, the Fed starts getting more aggressive with cuts as they begin to panic, as the stock market peaks and begins to sell off. I told you, I think that the Fed is going to do that. But Powell, this is a different set of circumstances in that Powell is under a lot of pressure from Trump. But like I said, I personally don't believe the Fed is going to cut rates until they panic, but this is a different set of circumstances, and Powell could just cave under the pressure and go ahead and do it. We'll see. Do we actually get a cut? If the labor data turns back up, if the inflation data continues to rise, then we still may not get a cut in September. I don't know, is this ego with Powell? As the herd celebrates Powell here at his final Jackson Hole, is this Powell caving? Or maybe investors and traders are being given a false sense of security because we still are going to have more data that could completely change the odds of a September rate cut. Now, talking about the Fed's independence and saying that a rate cut is warranted because of growing risk to the economy, especially in the job market, suggesting it's not from political pressure. But again, what happens if we get the revisions with the jobs report at the beginning of the month of September, and you get a strong jobs report and everything ends up getting revised back up? What happens then? See what happens. That's why I say I don't know if those numbers are trustworthy. I don't know if they're real or not. Maybe they are. Because as you know, I eventually believe we're going to get negative numbers. Eventually believe Trump's going to get his rate cuts, but it's going to be for the wrong reasons. It's going to be because of a coming recession. I have no idea if Powell's now caving under political pressure. I'm telling you, if inflation ticks back up, again, they're likely going to be reluctant to do a September cut. And I've been right about the inflation data. We got the inflation reports last week. I was right about that. I told you this week I predicted that Trump rattled the markets with those tariffs. He did that with the aluminum and steel tariffs earlier in the week. Saw markets sell off on that and with Nvidia and the tech sell-off. I told you Nvidia was breaking that trend line, so I expected Nvidia to take the market down. That was correct. I told you that I expected, before this week happened, that I expected that Powell could rattle markets. He maintained his hawkish tone. But I also told you we got a sell-off ahead of Powell, 6-day decline, losing streak for the NASDAQ, a 5-day losing streak for the S&P. We could rally up towards those 10-period moving averages for a test and end up rallying with Powell because we had the sell-off ahead of Powell. That dropped 4.30% ahead of Powell's speech. Ended up getting a big rally with Powell, but again, nothing has changed. NASDAQ rallying back up, back to the NASDAQ, rallying back up to the 10-period. Again, we'll be looking at Fibonacci retracements if it tries to go higher. Got the NASDAQ again, having already peaked and rallying back up after a significant sell-off of 4.30%, the Dow's making new highs. And I talked about, remember, camouflaging what's going on. We've had the tech sell-off. Well, the Dow makes new highs, and Powell comes out. It's going to be a rate cut, everybody says, and happy days are here again. And now you have NASDAQ not making new highs, but the Dow making new highs, likely camouflaging what is going on. I talked about earlier this week and last week. You're watching the 10-period moving average, the cloud here. Again, I'll be looking at the Fibonacci retracements if we continue to go higher. Semiconductor ETF, SMH doing the same thing, going back to that 10-period moving average in the cloud for a test, which is the momentum cloud here. Nvidia rallying towards the 10-period and the 20-period, not tagging it. Again, could even overthrow it here and see them still get a bearish cross. We've broken the trend line already on Nvidia. Nvidia up 1.72% today. Talked about this trend line on Nvidia marking bottoms. This trend line up here marking tops. We hit it. We went sideways. We eventually broke down from the lower boundary of the trend line, and we ended up breaking it, back testing, and then we've sold off towards our 50-period moving average. Right now we're rallying up towards the 10 and 20 period moving average, but still below them as we saw a moment ago after a divergence played out here. So again, breaking of this trend line, it is likely both NASDAQ and the S&P, or the NASDAQ and Nvidia are correcting, and currently the S&P's is going sideways. I think Nvidia eventually takes out the 50 period, moves closer to the 200. You see a deeper corrective move before it goes higher, as I've talked about. I think Nvidia is forming a massive broadening formation into this upper channel of resistance. This is all the data we have on Nvidia. Trend line, parallel boundary, slams right into the June peak from 2024, and we were just under it slightly, just by a whisker below it there with our recent high. I think this will eventually produce a top with Nvidia that will give us a bigger sell-off, and eventually I think Nvidia ultimately comes back to the lower channel line and ends up getting a massive bear market. We were just shy of that upper channel line here. We hit it in June and we failed to reach it over at these other peaks, but we did come to just underneath it with our recent high here in 2025. We end up with a bigger pullback or something bigger than what I've marked here, marked a more mild pullback here. If we get a pullback, a bigger one, I still think we're going to go up and slam up to it again and end up forming a larger divergence on the weekly chart. You have a massive broadening formation. I don't think it's done. I think we sell up but then go to higher levels. Closer towards the 200 level on Nvidia once this sell-off is done. And it may be bigger than what I've marked here. Here you can see the massive broadening formation on the daily chart. And I've talked about how we overthrew these trend lines to go towards that trend line in the weekly time frame. We formed this divergence on the RSI, broke the rising trend line as we saw earlier in the daily time frame, and now we're rising back up towards the 10 and 20. If we get rejection below them or just overthrow them and get rejection, end up getting a bearish cross again, we could see a bigger pullback. What I think is likely going to happen, I think we're going to have a wave 4. I think we've completed the wave 3, and that we'll get a wave 5 going into the coming months ahead. So the NASDAQ doing what Nvidia is doing, it's rallying back up towards the 10-period moving average. Semiconductors doing the same thing.